Long story short, Nvidia fell after hours, but got defended in part. Qs came down to that 465 and then got defended in part. So we have really a bounce in play, which was pretty much what I expected from Monday morning review. And that is to say that we have neutral waiting pregnant pause past 7 days. So I am still convinced we're going to go hit that QQQ 493. So to get there, we've got to get through Nvidia earnings.
This short clip is presented by Club. Club provides access to Samantha LaDuc and her team of professional macro and micro traders, analysts, and educators. Club is ideal for active traders, investors, and institutions who want Samantha's best-of-breed market timing calls across all asset classes and time frames like chase, swing, and trend. Get the trade before it happens. Sign up Club now and get full access to daily live trading room with Samantha LaDuc, Slack trading desk with detailed analysis and trades, custom trade support when you need it, and much more. For more information, visit www.LaDucTrading.com/club.
The fact that we did literally come right back down to 465, look at that, and then popped above, and we're basically a little higher than where we closed yesterday, 471.35, we're at 472.77. So seriously, it's just, that's it. On, of course, Nvidia coming all the way back down to that 115, which was right in this area. We hit 115, it bounced, it came back down again, and then obviously we're sitting above 121. So energy this morning is really just, okay, good, we made it through Nvidia. They didn't drag us lower in any significant way, as you can see with Qs. SPY also came down, which was really a great little short yesterday. If you took it intraday, remember I put that trend line and it was above the trend line. I said, if we break this, this is your price target, 558193. So we went through it and got above and literally closed right above it. So that this is still the market we're in. Mechanical buying, relief that Nvidia didn't blow it apart with some disappointment like an SMCI. And then of course, economic data out this morning, which was the US second quarter GDP grew at 3% annual rate. The estimate was 2.8%. So we have still, according to that metric, before revisions and whatever else comes down the pike at the end of the year, because we still have 2 quarters to go, right? But anyway, for the first go round, it is bullish. Some are even saying, oh, the Fed doesn't have to cut in September. They will cut, by the way. US jobless claims came in at 231. So well under my 267,000. Still, that's my line in the sand. We haven't tagged it. We haven't tagged it for a few years. And it was estimated at 232. And by the way, they haven't really moved for many, 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 many moons. So we're not having any disruption in the force with jobless claims. And then we had this PC rose at 2.8%, which is less than the 2.9%. And that's more bullish because the rate of inflation is falling. So that's very helpful, supposedly. So we have this morning a backdrop of good data. And I still think that supports, and there are other data points that came out, but the point is, I still think that supports a market that wants to go higher from mechanical buying, from economic data, not so bad. Fed is only going to be doing a quote unquote normalization cut, not accommodation. We are going to run into this September options expiration, in my humble opinion. And then we can really address more volatility after that. But for right now, I still think this one more high mantra that I have is in play. Now that we're through earnings, and we do have more data coming up, no question, non-farm payrolls. But remember, next week, market is closed on Monday, but we have some PMI, some ISM, trade deficit, all the usual suspects here of slow start to a month for economic data. But we have this very big one of non-farm payrolls. Now that's September 6th. And this is the unemployment rate that comes in. And right now we're at 4.3%. We jumped from 4.1 to 4.3. I really believe it's going to soften down to 4.2. I think that's one of the engines or the drivers of how we're going to get to go fill that gap at 493 in the Qs. I'm looking for positive data to get us to that 493. So far, the economic data has been coming in. Fed's still going to cut. Unemployment will drop back down to 4.2. Fed's still going to cut. There's nothing that's going to change my mind about that. But I think we're going to have a supported market. And that's very important. I think we're going to have a supported market into the beginning of September. And I don't know when we're going to get the actual drama of more volatility yet, but you know me, I'm on it. As it relates to the dollar, yes, we have absolutely come back up. As it relates to the yields, yes, we have absolutely stayed above that 3.8%. And by the way, I know why we're staying above that 3.8%. Long story short, Treasury Department aggressively pushes down long-term interest rates via shift to T-bill issuance and bond buybacks. But buybacks occur at huge losses for investors. Today it bought back a 20-year bond for 66 cents on the dollar. This is exactly how they keep that 10-year above 3.8%. And I've said this really strongly, as long as we stay above 3.8%, the market can grind higher. I am still there.
Subscribe to LaDuc Trading YouTube channel for more live trading room recap videos and other content.